Yeah. In this session, we'll look at this financial reporting mechanisms, which talks with the various elements that are going inside the balance sheet, inside the P&L statement, how actually these elements get recorded into these financial statements. So, to start with, whatever we have dealt even in our previous session, the assets, the balance sheet actually contains something like your assets, liabilities, and owner's equity, right? Whereas the P&L statement contains something relating to your revenues, expenses, other income kind of thing, finally computing the net profit. So in a detailed way, if I have to look at any activity of the company, any transaction which the company is doing, I can classify them into three categories. One is the operating activities for the company, which is more to do with their core business operations, selling of products, payment of taxes, hiring employees. These are all a part of the core operation, advertising, sales, promotion. These are all a part of core business operations of the company. Think of any let's say a Maruti Suzuki car manufacturing kind of a company. Whatever are associated with the core car manufacturing and selling kind of a business, they all go as a part of the operating activities of the company. Whereas there are some transactions which happen with respect to investments. The company putting money somewhere else, not in the core business. Like they have acquired some other company. They purchase some machines at a very on a very big scale, or they buy shares of some other companies, they buy mutual funds of some other companies, they buy bonds of some other companies, they buy some other companies itself. They all go as a part of investment activities of the company. Whereas the third set of transactions which the company does is a financing activities. They get money from outside. They are all financing, where they put money outside in a very big scale. We all take them as investment activities. Anything that they get money from outside, they are all being treated as financing activities. Raising loans, taking a loan, or bringing in fresh equity capital, all these things go as a part of the financing activities of the company. So every transaction, first we decide whether it goes as a part of operating activity or a financing activity or an investment kind of an activity. And when we take it to the financial statements, we will be seeing whether that particular entity, whether it is operating or financing, and that transaction will go as a part of balance sheet, or will it go as a part of P&L, or will it go any wherever. So in that itself, we will decide whether it goes into assets or liabilities or owner's equity. If it goes into balance sheet, will it go as a part of assets or liability? So if let's say I have paid cash to buy something. So what is the transaction there? Payment of cash. So my cash has gone down. I have purchased something. So as on that date, I'm the ownership of that particular machine. So that particular machine is what I am owning. So that becomes my asset. That particular machine which I am owning will become my asset. Cash is also my asset, but it has gone down, right? Because whatever I own are all treated as assets. Whatever I owe to others, they are all treated as liabilities for us. So in some cases, what we could very well see is we will list out all the assets, and we also talk about contra assets, the assets which are negative to that asset. For example, the machine. Whatever the machine I have purchased, I will receive future benefits from that machine, so I can treat it as asset. Any machines that we are purchasing, because on that particular day I will receive some more benefits from it in future. So when I say benefit, cash or consumption, both are called as benefits, right? Whenever I am expecting that I will receive some benefit from it in future, I am calling it as an asset, right? But to some of these assets, let's say that machine, there is a wear and tear, there is some loss of value over a period for various reasons. We'll talk about it in more detail slightly later. But for the time moment, you can simply understand that whatever the machine, over a period its value decreases. The same machine, because of the usage, because of various things, its value goes down, which means the depreciated value, which is like an updated value, where we are removing some depreciation every year from its value. So the depreciation is like a contra asset, which is reducing the value of the asset. So depreciation becomes a contra asset to your fixed asset, or let's say treasury stock. Any new shares which you have issued, you have bought back the shares. Treasury stock is the shares which are bought back, but which are not fully retired by the company. They will be getting retired very soon. So that's again a contra, because I have issued 1000 shares, 10 shares are bought back. 10 shares go as a part of treasury stock. In net, it looks as if we have issued only 990 shares. So this is a negative account to the existing account. Those are called as contra assets. Similarly, bad debts. Accounts receivable is what amount I have to still receive from my customers. That's a benefit that I will get in future, so it's an asset. Benefit that I receive from my customer, so it's an asset. What is the contra to it? Some amount I may not receive at all. That is what we call as a bad debt. So I have to receive still 10,000 bucks from my customers, but I'm not sure whether I'll receive 500 bucks or not. That is what is the allowance for bad debts. We are right now thinking that probably 500 may not be received out of the 10,000. That is what we are calling as allowance for bad debt. So all these things go as a part of the contra accounts. So we have to see whether each of these items is going as a part of an asset or a contra asset to some of the existing assets, or is it a liability, which is like you have to really pay in future. Some obligation lies with the company in terms of future payment. Those all are treated as liabilities. I have purchased something on credit, so I have to pay money to my vendors in future. So that is a kind of obligation or a liability for me. So I have to list down whether it goes as a liability or it goes as a part of owner's equity. Owner's equity is all capital of the owner. Whatever the profit the company has generated during a particular year, that entire belongs to the owners itself. Owners means shareholders also included. Whatever the profit you generate in a particular year, that entire money belongs to the owners itself, right? Of course, some portion of it they receive, they take in the form of dividend, but other portion which they don't take is also their money only, right? In any business, whatever the profit gets generated during a year, that entire thing goes to the owners. But of course, in this model, what we are saying is some portion of it they are taking in the form of dividend, but the other portion they are retaining with the company itself. That retention with the company is also their money only. So what we are saying is, in the owner's equity portion, we are looking at common and preferred share capital, retained earnings, and also we will be slowly talking about other comprehensive incomes also. We have a detailed workout on that. So for the time being, you can understand all these things, they are the components of the owner's equity part. So you have to understand in every transaction, okay, which of these which of these entries I have to put that transaction into. Should I put it into assets, liabilities? Which ones are going up? Which ones are coming down? I need to have a clarity on these aspects. And similarly, when it comes to the income statement, we are clearly identifying the revenues. What is coming during the particular year? Sales, right? What is the sales during the period? What is the gain that has come during the period? I have sold some of my investments. Other income, basically. These are all non-operating kind of incomes. In terms of, let's say I have sold some of my investment. I have purchased